Hey everyone, so in this video, this is going to be the third part of this series, and I think it's probably going to be the last one. So I'm going to go really deep in this specific video, and in this one, we're going to be talking about how you can put all this together to form a trading plan. So how can we use market structure to actually trade the markets? Okay, because we all understand what it is at this point, I'm sure. We know when something is operating within a bullish market structure, and we also know when something is operating within a bearish market structure. We also know when that shift occurs to the upside or to the downside. Okay, so how do we use this information that we now have to navigate the market successfully? That's what we're going to break down in this video. So I think a really good way to do this is, so I'm going to use something that I plugged in chat this morning in my free Discord chat, 100% free, video in the link in the description. So we're going to break down this AUD USD chart, and we're going to break down the market structure on this and how you could use market structure to trade this successfully. Okay. So right here, you can see we got this is the chat. You can see I put AUD USD in here this morning. This is a 1 hour chart right here. You can see I put in this like little blue line right here indicating that I think it's going to go up. It's going to attack those buy stops. AUD USD, I think we clean out Friday's highs very soon. Larger time frame structure is bullish, and I see we are tapping into that bearish fair value gap on the daily, but it's still showing no signs of weakness at the moment. It's just you got your lower time frame shift as well. So keep an eye on it. So let's break it down from the daily chart and let's work our way down. So when you're using market structure to trade the markets, it's very important that you utilize different time frames, okay? Now, the amount of time frames is up to you, but I recommend at bare minimum, you at least have 2 time frames. So you got your larger time frame and then you got your lower time frame. You could do it off of 2, you could do it off of 3, 4, 5. Some people do more than that, but what I want to get across is utilize different time frames, using market structure on different time frames, okay? So what I said here was larger time frame structure is bullish, okay? And like I said, we are tapping into this bearish imbalance, but it still looks really strong. It still has a lot of strength towards it. It's showing no signs of weakness at the moment. So remember our previous talks on market structure, my previous illustrations that I gave to you. When did this have that shift in market structure to the upside on the daily? Right here. See this? What's that? That is a swing high level. See that? Highest high in the middle, right there, if you look at my cursor. And then you got a lower high on the left, and then you got a lower high on the right. See that? That's your swing high level. And then what happened right here where this opened up at? If you look at my cursor, price opened up right here, and boom, we break that high. That is your shift in market structure, okay? So what happens after we get that shift in structure? It closes, and the next day we close higher, and we get our swing low level put in after that shift. So we got our shift, and we had our swing low put in shortly, very, very shortly after, okay? Again, swing low, lowest low in the middle, and then you got a higher low on the left, you got a higher low on the right. That is your swing low after the shift in structure. Because remember, step 1, shift in structure, igniting move. Step 2, little retracement back within the range, it did it. Step 3, swing low. And if you want to wait for that step 4, wait for the third candle to get taken out as well. The buy stops above that level. You can wait for that too if you want to play it really safe, okay? So we are operating 100%, it's 100% confirmed, bullish market structure on our daily time frame. So our larger time frame that I'm using for this example, this is our larger time frame, okay? We're not executing. So if you can, because it depends on what type of trader you are. You can execute on the daily, but your larger time frame would have to be like a weekly or a monthly. So I'm just pretending, let's pretend for a second that we are day trading. We're all day traders right now, just for this example. And our larger time frame that we're using is the daily chart, okay? And it's always best, there's ways to navigate a bearish market structure on the daily. I've done it successfully plenty of times. Then there's a million ways to trade the market. There's a million ways to skin a cat. But I'm telling you, for a beginner, the easiest trades, the lowest hanging fruit, is going to be when you have your market structure in conjunction on different time frames. When you're trading with that larger time frame trend, when you're trading with that momentum that's to the upside, those are where your easiest, highest probability trades are going to be. So that's what I recommend you do, okay? So we have confirmed at this point, daily market structure is bullish. It's made that switch, 100% confirmed. So after we conclude that on the daily chart, we're going to go to our lower time frame. So again, you can utilize different time frames if you want. You can use like a 4 hour, a 1 hour. It's really up to you, okay? Now this is key, okay? So, and I think if a lot of you, if you stick around to the end of the video and you really grasp what I'm telling you, what I'm giving you here, I think this could be one of those light bulb moments for you. I think this is going to be something that could really open your eyes and change your trading for the better, kind of level up your trade into that next point that you needed to go to. So I think if you need to be taking notes, you need to be paying close attention, because I think this video right here could change a lot for you, okay? So what you need to understand is price is fractal. Okay, then that's the importance of utilizing different time frames, of having your larger time frame, but also having your lower time frame for execution. Okay, so price is fractal. What occurs on one time frame occurs on another time frame. So the same signature that we want to see on the larger time frame, we want to see on the lower time frame before we get an entry. Let me say that again, and really grasp what I just told you. What we want to see on the larger time frame, aka our shift in structure, which we got was bullish to the upside, you want to see the same thing on your lower time frame before you go long. So what happened here? What are we looking at this morning on AUD USD? Well, we've already concluded larger time frame is bullish. And what happens? So price came up right here, it took out this high, it pulled back, it pulled back, it pulled back. It completely rebalanced this little portion of price action, which is important information as well, but we're not going to go too deep into smart money concepts in this video. But it rebalanced that portion of price action, which means it pulled back into a discount marketplace. Okay, it had that pullback into a discount. Key Fibonacci retracement, 61%. But what you want to see after this is you want to see the same confirmation. What was the confirmation? The market structure confirmation that we talked about in the previous two videos. We want to see a break a previous high, and we want to see a swing low put in. So I believe we had it on the 15-minute. Yep, right here. So this morning, larger time frame is already confirmed. It's bullish. And we want to see the same exact thing that we had on the larger time frame on our lower time frame. Okay, the same exact signature. That's your confirmation that you want on the lower time frame. Okay, so you're using your higher time frame for direction, because we know we're trading with the daily trend, we're trading with the daily strength. And I'm telling you, just by doing that alone, just by trading with the daily trend, the daily strength, you put the odds in your favor substantially. I mean, substantially, because a lot of people, a lot of beginners, they don't even do that. They don't even trade with the overall trend. Okay. And just by doing that, I mean, you got a huge edge in your hands just by doing that alone. Okay. So we got our larger time frame. We're operating within a bullish market structure. And now we're going to utilize our lower time frame. So in this case, a 15-minute chart. And we're going to find that confirmation, that shift. Okay. Because if you want to play it really well, you don't really want to just grab it as it's selling off. It's selling off because right here, look at my cursor for a second. When we are selling off right here, we are operating within a bearish market structure on the short term. On the short term, the daily still bullish. The daily market structure is still bullish, but this lower time frame right here, we are operating within a bearish market structure on the lower time frame. See this? It's consistently tagging these lows, consistently tagging these lows, consistently tagging these lows. And then what are we waiting for? We're waiting for our confirmation, which I have went over in the previous videos, that shift in market structure from a bearish to a bullish market structure, but now on our lower time frame so we can execute to get the best entry. So right here, what do we have put in? Look at my cursor. We have a short-term high put in. So let's note that for our study. We have our short-term high right there. Boom, that's put in. And then what happens next? We get a nice move through that level right here. Look at my cursor again. Boom, we break that high. What is that? Answer among yourselves. What is that? That is a shift in market structure. That's step number one that we have talked about, okay, in our illustration earlier. That is a shift in market structure on the lower time frame, your execution time frame. Now that's, if you want to play it safe, you need something else to occur here. You want to see your swing low level put in. So we got our shift. That's step number one. What do we want next? We want a swing low level put in. Lowest low in the middle. Look at my cursor. Lowest low in the middle. And then we got two higher lows on the left and the right. 1, 2. 1, 2. Higher lows on the left and the right. And then if you want 100% confirmation, third candle gets purged. It does it right there. Opens up, trades above it. You're all set at that point. 100% confirmed. Market structure on the 15-minute is 100% bullish. 100% bullish. Okay. And now this is where you'd be looking for your entries. Okay. What happens? Price, it trades lower because it was in a short-term premium right here after taking out these highs. Again, if you are wondering what premium, all that stuff means, premium discount, I have a YouTube video on that as well that you can check out. Just search my channel for premium and discount and you'll see the video. So we traded up into a premium market and then we pulled back into what? Into a discount, okay? Because we efficiently delivered this portion of price action, this fair value gap. We tested our order block right here. Look at my cursor. Again, I have videos on that. Search my YouTube channel. What is an order block? You'll get a few videos on order block because there's an order block right there. We test that. And we test this level right here as well. See that short-term high? Remember, resistance when broken becomes support going forward. So we got a few things occurring in here. What's everything that we've concluded so far? Well, we've already, our larger time frame. We're trading with a larger time frame. We're trading with the bullish trend. We're trading with the bullish market structure on the daily chart. Okay, that's our larger time frame. And now we got our lower time frame, which is the 15-minute where we're executing. And we got the same exact signature. The same exact signature on the 15-minute that we were looking for on the daily. Okay, the daily, we broke our swing high. We had our swing low put in. Bullish market structure on the daily. We got the same exact signature this morning on the 15-minute. Broke that swing high, swing low put in, 100% confirmed. It pulls back into a short-term discount, test our order block, test our level of support, and this is where you get really precise with your entries. This is where you get your, because this is really the importance of this lower time frame. It's narrowing down your risk reward, so you can get really good risk reward plays on this. You could have maybe risked the low of this fair value gap, which is what I do a lot of the times, like the igniting candle that we have the fair value gap created on. A lot of times I'll put my stops below that. So you could have, I wouldn't put it that tight because that's really tight. I would give it a little bit more breathing room, but you could have risked the low of the fair value gap. And as I said in chat, I think we're going to clean out Friday's highs, which is right here. Why? Because what's resting above Friday's highs? What's resting above highs? Buy stops, buy side liquidity, okay? Price is going to be drawn to take out that level right there. It hasn't done it yet, but it's probably about to do so because there are buy stops above that level. Price is going to want to purge, take those buy stops out of the marketplace. I believe that's where we're headed next, okay? So again, we just went over quite a bit right there. So I'm going to go over it one last time, a little bit quicker here. Again, watch it a couple times if you need to, because I think if you really grasp what I'm telling you here, this is going to be that switch that a lot of you need. It's going to be like a huge turning point for your trading career, I believe. And really, this is all you need. I mean, this is literally what I'm giving you in this series is all you need to trade successfully in the markets. I mean, you can make a full-time career out of everything that I gave you in this series. This is all literally all you need. Just understanding, having a firm grasp of market structure, you could carve a career out of the marketplace just with that alone. Okay. So one last time, we're going to go back to the daily chart because what did I tell you? Price is fractal. And knowing that price is fractal, that means that we need to be utilizing different time frames. We need at least one, at the very least, we need one larger time frame, and then we need a lower time frame. You can use multiple ones, like you could go down, like say your larger time frame's a daily, then you could go down to a 4 hour, 1 hour, 15-minute, kind of get a multi-time frame look at it. But really you need bare minimum 2 time frames, okay? You need a larger time frame, a lower time frame. Okay, larger time frame, you want to be trading with the trend, you want to be trading with the direction of where the overall market is heading. So where is that switch again? I want you to, where do we have that switch in market structure to the upside? Right here. See that? That's a swing high. That's step number 1. Our igniting move That's a shift in structure. Step number 2, we want to swing low put in. Lowest low in the middle, 2 higher lows on the left and the right. Lowest low in the middle, 2 higher lows on the left and the right. We got it. Step number 3, we want to see it take out the high of that third candle. It does it. 100% confirmed at that point. Okay. It's 100% confirmed. Market structure to the upside on the daily chart. Okay. Now, that's all we need on the larger time frame, really. That's all we need. We know we are trading with the larger time frame trend. Okay. So now let's go to our lower time frame. And we want that same exact signature on our lower time frame for our execution. Okay. And we got it this morning. Again, we don't want to grab it as it's just trading lower right here, because that's what we would call catching a falling knife. Now there's ways to do it successfully. There's ways to catch a falling knife successfully. But if you want like the layups, the easiest plays, the layups, you're better off waiting for that confirmation. Okay. Waiting for that strength to come into it first before you put anything on. Okay. And again, that strength, that confirmation that I'm talking about is the same exact signatures that we were looking at on the daily. It all comes down to waiting for that shift in market structure, waiting for that confirmation. There's your short-term high. The price does what? Breaks that short-term high. Step number 1, shift in structure. What do we need next? We need our swing low. Boom, we got our swing low right there. See that? What's the last step? We need to see it purge that high. Okay. At that point, it's confirmed. And then you can utilize your other concepts like support, just basic support and resistance, really. I mean, and if you really want to dial it in, get really precise, you can utilize smart money concepts, SMC, which is what I do, to get a little bit more precise with it. But really, just basic market structure, support and resistance to kind of narrow down your entry a little bit better. And that's all you need, because then you can see price traded back down into a discount market. And then you could have utilized, you know, basic support right there, order block right there, fair value gap filled. And now we're making our way up, and it looks like it's about to attack that buy side liquidity here pretty soon. Okay. Now I'm going to leave in the video description, as I did in the other 2 videos, I'm going to leave a link to, so I made a video on market structure a little while back. I think the title of it is the only video you need on market structure, but I'm going to leave a link to that in the description. And I'm going to leave a link to the blog post that I made as well on market structure. That's going to be in the video description. Okay. So I want you to watch those videos as well. Watch these a few times if you need to. You need to go into your own chart, study it, study this price action, because that's really the only way that you're truly gonna soak up what I'm giving you in these videos, is by going in your own chart, studying it for yourself, studying your own price action. And if you do so, and then you watch this several times, you go in your own charts, I'm telling you, it'll start to stick. Everything I'm telling you, it's going to start to click. It's going to start to make sense. And I promise you, you can make a career out of what I've have given you out of this series, just by using market structure, basic support and resistance. That's literally all you need. Okay. That's all you need. You could be profitable just by that alone. Everything that I've given you so far. Literally, I made this series in a day, and then I made the basic support and resistance series. And for anybody that's wondering what the basic support and resistance series is, just go to my playlist on my channel. You can watch that. The basic support and resistance series and this series, everything you need is right there. Take what I taught you in both of those series, go into your own charts, manage risk, okay? Because this is the technical part of trading. The technical part of trading, I gave you everything you needed with those two series. Right there alone, everything you need. Now, the bigger part, the more important part is risk management. You got to be able to manage risk correctly, okay? And you need to control your emotions. You need to be disciplined. You need to be patient, okay? I can give you this knowledge, but I can't be disciplined for you. I can't be patient for you. That's on you. That's your responsibility. So I think I'm going to end it there. Hopefully you found this useful. If you did, make sure you like the video, you subscribe to the channel, and I'll keep it coming.